Welcome, guys. My name is Corey from Investor Life, and we help investors just like you, whether you're just starting out or whether you're a seasoned investor, scale your portfolio in real estate without using any of your own money. Today, guys, we're going to be talking about an interesting topic, and that is analyzing what market to be buying in. There's a lot of different markets all across our country, but which one do we choose? What are some of the things that we should be looking for when it comes to a market that we're going to invest in? How do we analyze it? Here we go. Let's talk about it. What are three top things that we look for when it comes to analyzing our market? Number one, and this has been one of the most widely believed reasons why we should invest in a particular market, is job creation and job stability. Think about it. If people have the opportunity for jobs, then they want to live close to their jobs. Pretty straightforward, isn't it? So what we want to then look for is what major employers are moving or coming or building new facilities in that particular area. Is there big infrastructure changes happening? Are there big supermarkets opening? Are there big provincial construction projects happening? These are the types of things that we start to look for when it comes to a market that is going to be sustainable for a long period of time. If jobs are leaving the area, people will leave. Demand will go down. So number one thing we want to look for is job creation or job stability. How do we find that? How do we research that? Well, pretty simple, to just go to our government's websites, whether that's a Canadian government, whether that's a provincial government, even our municipal governments. They all want to advertise their economic development, their economic viability, and why people may want to live there. If there's a major Amazon center being built, or if maybe there's a major pipeline project happening that's going to take 10 years to build, those are the types of things that supply jobs for a long period of time, long enough where it's going to have an effect on a real estate market. Now, there's other factors too, and this is our second point that we're going to talk about. There's other factors that have to do with a market going up or a market going down too, and that is foreign investment. And this is relatively new, especially for Canada, as how it's had a dramatic effect on at least a couple of our markets here in Canada. We've seen skyrocketing prices in Toronto and area. Same thing with Vancouver and area. And that has tended to spill off from there. As people gain equity in those areas, they move to smaller centers because they take their equity with them. They sell their properties in those larger centers. They now have money to spend on properties in other areas, and it starts to have a ripple effect as that goes out. But what starts a lot of it, and what has had a dramatic effect, is foreign investment. What do we mean by that? Well, think about it. If you are someone who has a large sum of money and you live in another place in the world, where are you going to invest it? Where are you going to feel it's a safe place to invest? Well, there's a lot of countries in the world that might be doing good real estate wise, but either the government is not very stable, the economic situation is not very stable, or maybe it's not considered a first world type nation. And so that's where Canada fits in there really, really well. People do feel secure with their money being invested in Canada. And that has helped Vancouver and Toronto's markets increase. And of course, like we talked about, that has started to spill off into other centers across the country. Number three thing that we might want to look at when it comes to a market, choosing a market to invest in is, and we touched on this earlier, is simple supply and demand. So what provinces or what cities, what markets in our country are having more people move to them? Now that ties in what we talked about earlier with job creation and job stability. But we can now do some research. Instead of the employers that are building centers or infrastructure projects, maybe we can do some research on our provincial or municipal government websites or our city or town websites. Start looking up to see how many people, is the population increasing in that area, or is the population decreasing? So if the population is increasing, that affects the supply. People need places to live. It affects the demand. People need places to live. So if the supply starts dwindling and the demand is increasing, that's going to have an effect on real estate prices. And of course, vice versa, when people are moving away, that's going to have an effect on real estate prices. So we want to start looking for markets where the population is increasing. Maybe it's been increasing for a number of years. You see a stable increase. People are moving there. People want to live there for one reason or another. That is another factor we want to look at when considering what market to buy in. So one caution I want to give everybody, and this is kind of what happens to a lot of especially beginner investors. When they start wanting to invest in real estate, they start looking for properties right around where they live. They think to themselves, well, I want to be close to it in case I need to do a renovation, or in case I need to take care of the tenants, or in case there's a plugged toilet, or they lock themselves out, or whatever the case may be. But really, as investors, if we're making smart decisions, if we could double our return on investment by investing somewhere else in the country or another market, one that maybe we don't live in, because we've built a team there, we have our realtor there, we have a property manager, we have contractors, we know a team, we've built that team, our return on investment could be significantly higher. So don't pigeonhole yourself to being stuck to where you live, investing where you live. We want you to look broader than that. We want you to look countrywide. Start talking with other investors. Start networking and finding out where are the hot spots right now that people are investing. Where are the areas where the vacancy is really low? Where are the areas that I see job creation happening? Where are the areas where there's big infrastructure projects occurring? These are the types of things we want to start looking for as real estate investors, because not only is that going to be good for us, but if we get to the point, and we'll talk about this in our other videos, if we get to the point where we're bringing investors on to invest with us, we need to be able to convince them that we chose solid markets to invest in. And not only solid markets that are going up in value right now, but solid markets that are going to be stable or go up in value for many years to come. And of course, guys, nobody has a crystal ball. Nobody can predict exactly what's going to happen in any market. Even if we see all of these factors are occurring, we could still have other influences that might affect a market negatively as well. What we want to do, though, is stick to the fundamentals that we're talking about. If we do that, we have the strongest opportunity to be able to see an increase in market prices and be able to have a low vacancy rate while we own that property for many years to come. So guys, a few things you want to keep in mind when it comes to analyzing a market that are really, really important for you as investors. We'll see you in the next video.